Hi YouTube, welcome to day 3 of a Blueprint to Profitability series. Today you will learn how to identify traps, the phase where 90% of beginners lose their money. So if you understand traps, you stop entering too early, you stop getting fake out, and you finally start reading the market correctly. A trap is the first fake continuation move after price breaks a swing high or swing low. So it looks like a strong continuation, but it's not. It's weak. It's designed to fool the beginner. So we have here example. So now I'm going to explain where the traps happen, how to know where the traps form, and you must first understand the basic structure. So in a bullish trend, higher highs, higher lows. In a bearish trend, lower low, lower highs. If this is new to you, go watch day 2 before continuing watching this video, because it's very important to watch day 2 before watching this video. So how traps form? Traps happen after price breaks a swing high or swing low. For example, price breaks a swing high, then it continue making higher highs and higher lows on a smaller time frame. This entire move is the trap for buyers. This is important. A trap continues as long as the price keeps making higher highs and higher lows in a bullish trend and lower low and lower highs in a bearish trend. So on a smaller time frame. When the price stops doing that, the trap is over. Okay, so we have to understand this small thing. The first thing, we need to know if the market is bullish or bearish. Here we are seeing a price making higher highs and higher lows. Higher high, higher lows. So the first step, a trend is bullish. So we have to think only taking buys. The second thing is we need to go on higher time frame. The third thing is you need to mark out your swing high and your swing low. Okay, so now I did mark my swing high. This white line is the swing high. Okay, we have here swing high, and here swing high. So when the price breaks the swing high, okay, so you will see on the lower time frame like this. So the price will make this, it will break the swing high, and it will continue making higher highs and higher lows on the smaller time frame. This is on a higher time frame. On a smaller time frame, you will see like this. You will see like this. This is all a trap for the buyers. So from this area to this area is the trap. How we know when the trap is ended? You have to follow the market structure. In this area, you will see market structure is changing. So when the price begins to make a bearish structure inside bullish trend, this is the recharge phase. So the recharge phase is taking liquidity of money, taking money from people, and then the price shoots up like this. It will go like this on a small time frame. It will go always uptrending. Okay, so this is the simplest way to explain it. You just have to follow the market structure on the lower time frame. So the first thing, you want to know if the market is bullish or bearish. Then second thing is you want to mark out your swing high or swing low on the higher time frame. Bro, understand this, on the higher time frame. Then when the price breaks swing high on a higher time frame, then you will switch to a lower time frame to see when the trap will end through follow the market structure. So now we're going to explain why the market creates traps. So the market creates traps to pull in late traders, trigger emotional buyers and sellers, collect stop losses. Yes, it takes your money, and then gather liquidity. So in example, in a bearish trend, price breaks lower low, beginners panic and they sell immediately. So they place tight stop losses. The market uses the trap to take them out, and trap exists so the market can load liquidity before the next real move. So this is why the market creates trap, and why we never trade traps is because it has no real follow through. It's the weakest part of the move. It always fake out the beginners. It wipes out stop losses instantly. This is why so many beginners lose money. They don't understand the system. But you are watching this series, so you will learn exactly where the traps are and how to avoid them. So now we are going to trap example in a bearish and bullish trend. For the bullish trend, okay, so it is making higher highs, higher lows, higher high, higher lows on the higher time frame. Price breaks a new higher high. Beginners think it will explode, so I will buy right now. But that first small push up is the trap for buyers. So trim cycle happens every day. What the trim cycle is, it's trap, recharge, momentum. This cycle happens on every pair, every time frame, and every single day. So today we are only focusing on the trap, recharge, and momentum. We will explain it in day 4. So here we are seeing bullish trend, okay, because it's making higher highs and higher lows on a higher time frame. Okay, so here we have a swing high. So the price is making a bullish structure. Then here from this area, the bullish structure it stops and it's making bearish structure inside bullish trend. The main focus is buys, okay? The main focus is buys. So when the recharge phase is done, this happens. Okay, this happens. So this is a recharge phase. So here you will start to see a bearish structure on the smaller time frame. That's why we need to see smaller time frame to know where the recharge phase will end. Here it starts to make a bearish structure, and then when the price comes here on the smaller time frame, it starts to build bullish structure, and then it break this area. So now we have here another swing high. A price is making bullish structure on the smaller time frame. Okay, I have to delete all of this because it will be annoying. So now we have here swing high. From this area to this area is the trap. Okay, so here it's making higher highs, higher lows on the smaller time frame, and here the bullish structure it stops and making bearish structure inside bullish trend. Okay, so here is making bullish structure. You will see on the smaller time frame from this area. So you will start seeing bullish structure from this area on the smaller time frame, and it shoots up. Again, we have here swing high, a price from this area to this area is the trap. So here it's making on the smaller time frame bullish structure, and from this area it starts to make bearish structure on the smaller time frame. That's why you see this retracement. Okay, and then from this area, when the price is done with making bullish bearish structure, you will see in this area it's building bullish structure. Okay, and then it starts to build up. So this is how the market up trending. Okay, we have here also example swing high. Okay, here the price is making higher highs, higher lows. Okay, then from this area, if you go on a smaller time frame, you will see it's start to build bearish structure. Okay, inside bullish trend, it start to making bearish structure on the smaller time frame. That's why we need to check smaller time frame. So from this area, it start to make a bearish structure. So it will go down like this, and then from this area, it start to make bullish structure on the smaller time frame. And here we are taking the trade, and you can also hold your trade like this, so until the price reach an area where you want to stop your trade. So this is in a bullish trend. We have here also a bearish trend. Okay, the first thing you want to go on a higher time frame, swing high, swing lows. This is the swing low, so price breaking it from this area to this area is the trap. Okay, you will start to seeing like bearish structure, and from this area you will start to see bullish structure inside bearish trend. Okay, so the price will do like this, and then from this area you will start seeing a bearish structure, and the price will go down, and you can hold your trade, and it will continue doing like this. Okay, we have also here swing low, it breaks. Okay, then recharge momentum. We have also here the same thing, it will go down. When the trap phase is done, start seeing recharge phase, and it will make a bullish structure on the lower time frame inside bearish trend. So now how we know the trap is finished? Structure shift on smaller time frame. So to confirm the trap is finished, so we zoom into 30 minutes, 15 minutes, and 5 minutes. During the trap, structure still follows the main trend. So in a bullish trap, you will see higher highs, higher lows. So trap is still active. So you want to see first swing high and then breaking it, and on the smaller time frame you want to see it continue to making higher highs, higher lows on the smaller time frame after breaking swing high in a bullish trend. So when the trap ends, structure shift, and you start to see lower lows and lower high. So this means trap is done, trap completed its job, and the market is ready for the next phase. So here it will be like this. Okay, it will be like this, big candles on the higher time frame, for example like this. So you will not see the market structure, okay, because it's higher time frame. So we want to see what here happens. So we just switch to smaller time frame, and this is smaller time frame. We are seeing here, okay, that the market it start to build bearish structure. We are seeing here a double top. Okay, so now we are going to this. I will explain all of this, and then I will be back again to this picture. Okay, so now we are going to the how to know when the trap is ended. So this is, for example, a trap on a bearish structure. Okay, so when it's, so for example, we have here swing high, so it's breaking it, and the trap from this area it start to continue making lower lows and lower highs. So it start to making like this. Okay, and then from this area we know the trap is end because it's making a double bottom. Okay, so it's making like this. So and then it breaks this area and start to making higher highs, higher lows, and from this area we know the trap is end and the next phase begins. So why from this area the trap is ended? Because from this area there are buyers. Okay, so the price went from this area to this area, and it goes again up. So price goes again down to this area, but it couldn't break this area. So that means buyers are in this area pushing the price up, and then it did break lower high. Okay, so this is also lower high. So the price did break this area, and now it's making higher high and higher lows. Okay, so from this area, we know on the smaller time frame, the trap is ended. So we have also here the same. For example, this is a trap. Here we are seeing lower low and lower highs are made on the smaller time frame. And now from this area, okay, so this is lower low. The price goes again down and it made for us higher lows. Okay, so because this candle didn't close under this lower high, okay, price couldn't break this area is for reason, because sellers are not strong enough to break under this area. That's why sellers did stop from this area, and then it did break the lower high, and this is the trend confirmation for the upside. So this, for example, how you know when the trap is ended. We have also here for the bearish structure. So this is, for example, and this is uptrend. Okay, it's making higher highs, higher lows, higher high, higher lows, higher high, higher lows, and then the price goes up again and it made for us lower highs. So the price couldn't break above this area is for reason. Everything is for reason. Price didn't close above this area because buyers are not strong enough to go to this area and break it. So buyers stopped here, and then sellers did break the higher lows, and then from this area the downtrend begins. We have also here some examples. So for example, we have here a trap. So here is making higher highs, higher lows, and the price goes up again and it goes down. So it make for us double bottom. Okay, so this is double bottom, and then the price goes up. It made for us lower high. Okay, so the price didn't break this area. So the price couldn't reach this area is for reason. Everything is for reason. The price couldn't break this area because buyers are not strong enough to go reach this area and break it. So the buyers stop, and then when sellers break the double bottom, so here then the downtrend begins. The same thing here. Okay, here's making higher highs, higher lows on a smaller time frame, and then here it makes consolidation area, and then when it breaks the consolidation area, that means sellers took over and buyers are no longer in the market, and it will start to build bearish structure. The same thing here. Okay, so here it was making higher highs, higher lows, and then again the price couldn't reach this area is for reason, and that's why it did break this area and it started to continue bearish structure. The same thing here, guys. So it was making higher highs, higher lows, and then the price goes up, okay, and it goes down and breaking this area, and it goes up again. Now this is lower high, okay, and this is lower low. This is lower high. This is lower low, lower high, and it will start to make like this. So you just have to follow the market structure on a smaller time frame. This is so important to know where the market can go.